Hey, welcome or welcome back. Let's get right into it. In this episode, I'm going to give you three things to do to make sure you always get that tax return. Okay. So, first of all, it's a lot of things that you can do, but these are the three that are going to be the biggest and most impactful for most people. So, let's get into it. First thing you are going to do, which a lot of people don't realize they need to be doing, is if you work a 9 to 5, part time, whatever the case may be, but here's the classification: you work on a W 2. So that means you get a W 2 at the end of the year. You filled out a W 4 when you started your job. And at the end of the year, they give you back a W 2, which has a summary of all your earnings and all those breakdowns. When you do that, when you start a job, you always need to claim zero. Okay? You need to claim zero allowances on that W 4 form every single time you get a new job. And this is especially important for like really young people because they kind of sometimes have the mentality of, hey, I'd rather just get all my money, like as most money as I can, and pay the taxes at the end of the year. Really bad idea, because most of the time, as you know, things are expensive and that money is not going to be put aside. And then at the end of the year, you're going to be hit with a bill. When you claim zero allowances on your W 4, your employer withholds more federal income tax from each paycheck. So what that means for you is that throughout the year, you're going to be overpaying. And then when you file your taxes, you're going to get extra money back as a refund. So some people have this idea of like, oh, claim zero and you get all this free money at the end. It's not free money. It's just you've overpaid during the year and they are refunding you back what you overpaid. That to me is a better use of time and a better use of resources, because for most people, they don't have a lot of money. So if you can make sure your taxes are paid throughout the year, you don't even miss that money. And then bonus, if you overpay at the end, you might get a few $100 back. For some people, it may even be a few thousand back. And then you could take that little chunk of money and you could put it into a savings account, or you could invest that money. You could do something, and that could be a yearly way for you to go ahead and start building yourself a little bit of stability and a little bit of wealth. So it is a very smart thing to do. Most of the time, if you claim zero, you are not going to owe money at the end of the year when you are making well below $100,000. Now, we're not talking about high income earners. I'm talking to folks, like myself, who are everyday people. Maybe you work at a local retail store, or you may work in an office, but you're around that 60 grand a year and less mark. These are going to be techniques that are going to help you out. Okay. So most importantly is to make sure you claim zero. Now, if you already have a W 4, maybe you've been at your job for years, go back into your HR department and say, hey, could you pull up my W 4? I want to see what I claimed. Or if you do your taxes yourself, you can always look up that information on like your TurboTax or the IRS website. But you do want to know, and you want to make sure you put a zero, girl, in that box where it says allowances. Don't you put all your allowances in there. That is going to cost you to always pay at the end of the year. Okay, and that's what you don't want to do. It really gets stressful for people. I was watching a video recently. It was like a TikTok, or might have been Instagram, of this lady just kind of like so upset, understandably, because she's like, I paid so much and I owe at the end of the year, like what gives? So, little tips like this really do help. So next, I'm sorry to interrupt, but it's important. Welcome to Work It Lady podcast, where it's time to put in the work regarding educating yourself on all areas of your health and well-being. At Work It Lady podcast, we are dedicated to empowering women to take control of their health and mental well-being. Our mission is to provide women with the knowledge, inspiration, and tools needed to transform their lives, from improving nutrition and fitness, navigating womanhood, and if you're a mom, excelling at motherhood. Step 1, like this episode. Step 2, share it with someone you love, and even the haters, they need help too. Step 3, subscribe on podcasts, subscribe on YouTube, join our mailing list to stay in the loop on classes and events. I am so happy you made it here, girl. Thank you. Thing you want to do is you also want to make sure that you are taking a good look at your filing status. Now, this is still kind of lumped in with this number 1 tip. We're still on number 1 about the allowances. You want to make sure that you have the correct filing status. Filing status means you are single, married, or separated. I believe those are the only 3 options on the form. If you are single, don't try to file with anybody else. If you are married, you have the options of married filing individually or married filing jointly. You need to do a deep dive on YouTube, or read up on the IRS website. Go ahead and get some books and some articles, and maybe even chat with an accountant and see what is going to be in the best interest for you when it comes to your filing status. Now, here's something else sometimes people often forget is if they've had a change in their status, maybe they were married, but now they're single, they forget to change their status with their HR department. So if you have recently been separated or divorced, you need to go back to HR and be like, I need to redo my W-4. I need to go ahead and change this and update this. Because if you're still married, if that's how your filing is, that's how it's going to keep coming at the end of the year, and you may be paying more taxes than you need to. It may also bar you from getting other benefits. A lot of people, when they get divorced, sometimes they fall into a low income category. And so now, because you're married on your W-2, if you go to get government assistance, things like this, they are going to first consult that W-2 form, that tax filing that you do every year. And if it's still showing you married on there, girl, you ain't getting nothing, because they're going to have to consider that mate's income. You're going to have to call him and be in contact with him and do all of that. You don't even want to put yourself through that. So even if you're not officially divorced, you are still going to want to go ahead and put separated and make those adjustments so all that stuff doesn't come back on you. Now, here is another one that I have recently realized people forget about. And this is just in talking, guys. I am not a professional on this at all. I just have the years of experience of doing my own taxes and helping out some of my family members and close friends. But I'm by no means a professional. But people forget that there is such thing as a child tax credit. I have seen people who literally have kids that are not taking advantage of the child tax credit. Excuse me. So you gotta do that. You have to just include your children's social security numbers. You list them as dependents and all of that, and you're able to take that deduction. So make sure somehow that doesn't get overlooked. It seems like some people may get it automatically. Don't quote me on that, but yeah, like you should be taking advantage of that. Okay. So to review, first things first, this number 1 tip is, girl, make sure you are claiming 0 on that W-4. So when you get that W-2 at the end of the year, you are typically, if you're, below the 60, 70, 80 below range, you are gonna usually always get a refund. Okay. Again, high income earners, this is a different story. Okay. So now let's go on to the second thing that you are going to want to do, girl. And this is another big tip I have for people, because people be out here getting scammed over doing their taxes. Girl, do your taxes yourself, okay? Literally, the IRS, if you just have a W-2 and you don't have any other jobs or income, you are able to do that in some cases even for free on the IRS website. They also are partnered with TurboTax and H&R Block. And even sometimes if you go to them, it could still be for free. I think there's income requirements, and it's like the very simple base situations, but it is for free. I hear people who just literally have a W-2 income and they have a full-on accountant and they pay like $600 every time they do the taxes. Girl, you do not need an accountant if you literally have one job and you don't do anything else. Like, accountants are for people who have multiple revenue streams. Maybe they have a business, they have family assets and things that accrue interest and things like that, investments throughout the year. These, girl, are the people who need accountants. Girl, you good. You don't even need all that. So don't be overpaying for a service that you don't really need, okay? Some things that are benefit to doing taxes is you really know, like once you start reading up on it and getting familiar, and again, YouTube is a great resource. Read on the IRS website, do your deep dives. Once you get familiar, you are going to understand how the language that you read on the TurboTax software or the IRS website applies to you. And you are ultimately going to be able to utilize your credits and deductions and know what you qualify for more than someone who does not know you and they're just looking to get to the next person in and out and they're not taking their time with you. So definitely do your taxes yourself. It also helps you from year to year because on the TurboTax software, you're able to go through and see every year and see what you've done, and you can make adjustments as you move forward and things like that. So it gives you more control, more accuracy, it's faster, and really you are going to get the most benefit for yourself. In my personal opinion, when you do your taxes yourself, you also are less likely to be a victim of fraud because there have been reports of people at H&R Block and some of these other individual accountants ripping off people's identity because you got your whole social security number, your address, girl, everything with this person. And so you are less likely to be a victim of a fraud if you simply do it yourself. Okay. So that was tip number 2, which is do it yourself. Okay. Now, let's talk into our number 3 thing. And this is if you start, like, let's say you do tip number 1 and you do tip number 2, and that's working for you pretty good for a few years, and things start to improve and you're glowing up and you're getting paid more at your job and da 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 da. And then all of a sudden you realize, hold up, now all of a sudden I've done all these things, but I owe at the end of the year. This is what you're going to do when you owe and you've already done step 1 and step 2. You are going to need to open yourself a side business. Okay. I cannot stress the importance of this enough. Number 1, you're going to be making another revenue stream for yourself. Number 2, you are also going to have the ability to utilize more deductions, and it's just going to open you up to more benefits and resources. That does not mean it has to be a multi-million-dollar business, y'all. Some of y'all already got side businesses and you just don't know it. If you are married and your husband in the summer cuts grass on the side, that's a business. Okay? There is ways that you could go ahead and utilize that. Maybe you do hair on the side or you make jewelry on the side, but you have your other job. Don't just keep doing this like willy-nilly. Go ahead and set it up as a business. All you need to do is go on the IRS website, apply for a employee identification number and EIN, and then you are able to go ahead and start businesses. Go ahead and check your state website because there's also information that you need to file with your state to open a business in the state. But again, girl, most of the stuff doesn't even cost anything, okay? And it does not take a lot of time. You can file it online and it's a done deal, okay? So with a side business, again, you can deduct some of your ordinary and necessary expenses like home office, internet and phone, equipment, mileage, marketing costs. These deductions reduce your taxable income, which can lower how much you owe. So I feel like if, you're starting to get into owing, $5,000 at the end of the year, girl, open a business. Open a business because once you do that, if you're doing your things right and you're itemizing everything, you're probably not going to owe. Now, there is also a cap for that. Let's say your side business turns into a multi-million-dollar business. You are going to then not be able to get out of paying taxes. Contrary to popular belief, Billionaires do pay taxes, okay? There is nobody who is walking around in this country who is not paying taxes. Do not fall for the lies, okay? They get very creative. They have lots of things that they do. They probably sometimes might be paying less tax than what they should, but believe me, they are paying taxes. These big companies, Amazon, all that, they even have to pay certain taxes just for having multiple employees, okay? So don't let these people online fool you into thinking that you're just being, like, it's just so unfair. Like, it's not that deep, okay? So everyone is going to pay their taxes. Now, again, the main reason for this is that you want to offset your income with your losses. So if your side business has startup costs and is operating at a loss in the beginning, that loss may offset some of your main income, which is going to reduce your tax bill. So important to note, the Internal Revenue Service does require that it does have to be a real business, not just a hobby, and you need to show intent to make a profit. That means you need to have a website. I won't say that you have to have a website, but these are all things that could be looked at. At least you need to have maybe a social media presence. Have maybe like Square or something where you're like, okay, I could take payments. You know what I mean? Little things like that that really are not hard to do or cost a lot, that you could take like a side jewelry business and you could really turn that into something to where you are reducing your tax bill every year. I have talked to many people who have successful businesses that are side hustles. Maybe they make an extra $20,000 a year from their business, but half of that at the end goes to taxes because they're not doing their deductions right. So again, you got to make sure that you read, do your due diligence, do your research. Now, there's one more tip I'm going to give you that is a benefit. Actually, a couple more, because I love you guys and I want to give you as many tips as possible, because we are working it out over here on Workality Podcast. We're trying to navigate life and get ourselves on point and together, right? So other benefits, retirement tax advantages. So with the side business, you can unlock better retirement options like a SEP IRA or a solo 401k. I think even 401k-Bs might be a part of that. But these let you contribute more than a typical employee plan, which again also lowers your income tax significantly. So now you're investing in your future. You can set up these different 401ks even with your local bankers like Bank of America and things like that. You can set up for yourself. But the key is you have to have that business paperwork. You got to have a tax ID number. You may have to have like a LLC and things like that to get it going. But these are things that you can do, okay? Now, here is another key with that. It's also when you have a side business on your taxes, you might be able to take health insurance deductions. So let's say you are a 1099, you're self-employed, or you have a side business. You may be able to deduct health insurance premiums, which is a big tax break for higher earners. Okay, so that is huge. That is huge. You know how much that, if you got a family of 4, you're paying anywhere from $700 to $1,500 a month for health insurance. And you get to calculate all that up over 12 months and write that off as a deduction. So, again, everybody's situation is different. So, there might be some who can take advantage of that and some it may not, be a possibility for. But these are the things that you want to do, okay? Well, girl, I really hope that you found these little tips to be beneficial for you. My goal is to go ahead and drop gems here on the channel so you guys are staying informed and you're able to make those best decisions, because life is hard, man. And then when you get hit with a big tax bill at the end of the year, nobody has time for that. That's highly unpleasant, okay? And so if we can avoid that, great. All right, ladies, I hope you enjoyed this episode. Thanks for listening. Don't forget to subscribe, and I'll see you next time. Bye.